Dirty dealings, corporate battles, consumer woes. This is Evening 5. The MACC will summon all key decision makers involved in the awarding of a government contract to Spanco back in the 90s, including the Prime Minister and Finance Minister at the time. According to a report by Berita Harian, MACC Chief Tan Sri Azam Baki said this is necessary to complete the agency's investigation into the fleet management contract. The MACC is investigating the 2020 award of the contract to Spanco, its second such win following its 25-year mandate to manage the state's vehicle fleet from 1993 to 2018. The Prime Minister at the time was Tun Dr. Mahathir Mohamad, who held office from 1981 to 2003. Datuk Sri Anwar Ibrahim was Finance Minister up until September 1998 when he was sacked. Mahathir then took on the finance portfolio until January 1999 before it was taken up by Tun Daim Zainuddin until May 2001, following which Mahathir again took back the portfolio until around his resignation as Prime Minister. On December 11, 2019, a JV formed by Berjaya Group and NASA received a letter of intent for the fleet management contract, but the state terminated it in 2020 and awarded the job to Spanco. Last July, Berjaya founder Tan Sri Vincent Tan filed a suit against the Ministry of Finance and Spanco regarding the terminated letter of intent, sparking the MACC probe. So far, the graft buster has called over 20 individuals and frozen about 80 accounts of related firms and individuals. Hartalega Holdings booked a second straight quarterly net profit in the third quarter of FY 2024 as lower raw material prices and cost savings from its operational rationalisation exercise more than offset lower revenue. Earnings for the quarter stood at 22.38 million ringgit versus the net loss of 31.91 million the year prior. Quarterly revenue was down 10% year-on-year to 415.64 million ringgit, dragged down by lower sales volume coupled with a decrease in average selling prices. According to Hartalega, it faced logistical challenges arising from the ongoing Red Sea crisis, which has disrupted key shipping routes and caused shipment delays. Its CEO Kwan Moon Leong said, despite continued challenges in the glove sector, there are positive indicators that the global oversupply is gradually being addressed through key capacity rationalization efforts. This eases some pressure on excess supplies in the market. He expects demand to return to pre-pandemic levels in the late part of this year or early 2025. British American Tobacco Malaysia saw its net profit fall 23.3% to 47.36 million ringgit in the fourth quarter of FY 2023, as it made significant investments in launching vapor products, resulting in higher operating expenses. Quarterly revenue fell by 17.5% to 635.86 million ringgit. It declared a fourth interim dividend of 15 cents per share, down from 21 cents offered in the same period last year. For the full fiscal year, BAT Malaysia's net profit fell by 25.8% to 194.75 million ringgit, with revenue decreasing by 11% from the previous year to 2.3 billion ringgit. BAT Malaysia's Managing Director Nadal Salem said the group's financial results were within expectations given the changing market trends. Looking forward, he expressed cautious optimism about achieving improved financial performance while continuing to invest and grow Vuse, the disposable vape product. He also reiterated BAT Malaysia's support for the Control of Smoking Products for Public Health Bill 2023, though he also stressed that any regulatory framework developed under this new law must be sensible and evidence-based to ensure effective enforcement without fueling the growth of the black market. Shares in BAT Malaysia settled 0.44% lower at 9 ringgit 8 cents, valuing the group at 2.59 billion ringgit. EcoWorld International, or EWI, is planning a further reduction of 500 million ringgit in its issued share capital. This, it said, would facilitate its dividend distribution target of up to 504 million ringgit in 2024 and 2025. Once successfully completed, EWI intends to declare a first tranche of dividend amounting to at least 144 million ringgit. EWI President and CEO Dato' Teo Leong Seng said the strong appreciation of the British pound against the ringgit has enabled the group to repatriate more sales proceeds in ringgit than anticipated. He noted that the group's gearing is close to nil, with the exception of a one-term loan at EcoWorld London, for which EWI has set aside sufficient funds for repayment following its maturity in March 2024. In the absence of any immediate plans to undertake new launches or acquisitions in the near term, he said the current working capital requirements of the group is expected to be lower than those in previous years. EWI will continue to focus on monetizing its completed stocks for cash generation and return excess cash to shareholders. The proposed exercise is subject to shareholders' approval at its upcoming 10th Annual General Meeting and is expected to be completed by the first half of 2024. Metal fabricator Wentel Engineering Holdings ended its maiden trading day today at 28 sen, up 7.7% after opening flat on its ACE market debut at 26 sen. The company's market capitalization was 322 million ringgit, based on an enlarged share capital of 1.15 billion shares. Wentel was also the most active stock on Bursa Malaysia, with 250.78 million shares traded, marking a more than tenfold increase from its opening volume of 19.7 million. Wentel raised 71 million ringgit from its initial public offering. Group Chief Executive Officer Chua Chong Sin said the proceeds will primarily be used for the construction of a new manufacturing plant in Johor and the purchase of new machinery and equipment. The plant is expected to start operations in the second half of 2025. Touching on prospects, Chua said the security segment constituted 60% of its revenue and that all the projected growth in the company's top line will be in this business. If there is a semiconductor upsurge in the second half of this year, he said that would be a bonus for Wentel as well.